QQQI ETF revolutionizes covered call market with 16.5% return. Discover the game-changing ETF overtaking industry giants and reshaping investment strategies in 2025. The NEOS NASDAQ-100 high-income ETF, known as QQQI, has quickly risen to prominence since its inception in January 2024. With an astounding growth trajectory, it has become a cornerstone in the covered call ETF space, earning accolades like the Best New Active ETF of 2025. This video delves into QQQI's journey, analyzing its impressive performance and the strategic edge it offers investors looking to capitalize on market trends while managing risks associated with the tech-heavy NASDAQ index. Discover how QQQI achieved a 16.5% annualized return since January 2024. Understand its competitive edge over QYLD and JEPQ in total returns, price appreciation, and yield. Learn about its tax-efficient structure and ability to track closely with the NEOS NASDAQ-100 index, even during market corrections. QQQI is quickly emerging as the new covered call ETF king. Since its inception in January 2024, the NEOS NASDAQ-100 high-income ETF, ticker symbol QQQI, has amassed a staggering $1.5 billion in assets under management. It was recently crowned the 2025 Best New Active ETF by ETF.com, an impressive feat considering that over 300 new ETFs were launched in 2024 alone. Of those, more than 80% were actively managed, further emphasizing the significance of QQQI's achievement. The fund has delivered a total return of 21.77% since inception, translating to an annualized return of 16.5% as of May 15, 2025. This level of performance places it well ahead of established peers in the options income ETF space, most notably QYLD and JEPQ. QQQI has not only dominated in total return, but also outpaced its competitors in price appreciation and yield. It posted a price appreciation of 1.88%, which was over 8% before the 2025 correction, while simultaneously delivering a trailing 12-month yield of 14.38%. For investors, this translates to approximately $120 per month in income from a $10,000 investment. Importantly, QQQI's performance has closely tracked the Invesco QQQ Trust ETF, or QQQ, its underlying index. This is a noteworthy accomplishment, given that many covered call ETFs experience significant divergence from their underlying indices, particularly during volatile market periods. In QQQI's case, it has proven its ability to participate in upside market moves while simultaneously generating monthly income, even through the 2025 correction. The ETF space has undergone significant change in recent years. For context, back in 2019, passive ETFs outnumbered active ETFs by a ratio of 5-to-1. Today, active ETFs actually outnumber passive ones. QQQI has positioned itself at the forefront of this shift by proving that actively managed options strategies can provide competitive performance, high income, and tax efficiency. When QQQI first launched, there was some skepticism around its ability to perform well in the volatile NASDAQ space, especially compared to its sibling fund, the NEOS S&P 500 High-Income ETF, SPYI, which had already shown strong results. Because of this, many investors, including myself, opted to monitor QQQI's performance before taking a position. But over the last 15 months, QQQI has more than proven itself. The fund's dominance becomes even clearer when we compare it to other major players in the options ETF space: JP Morgan NASDAQ Equity Premium Income ETF, JEPQ, and Global X NASDAQ-100 Covered Call ETF, QYLD. These are two of the most well-known NASDAQ 100-based options ETFs, with $25.24 billion and $8.32 billion in assets under management, respectively. QYLD, often seen as the grandfather of retail covered call ETFs, deserves credit for educating a generation of investors on income strategies, but its performance has lagged significantly behind that of QQQI. I no longer hold QYLD in my portfolio and have never owned JEPQ. Given the performance metrics, I don't see a compelling reason for most investors to choose either QYLD or JEPQ over QQQI at this point. Let's break down why QQQI has been so effective. First, the fund has clearly outperformed QYLD and JEPQ in recent months. Its ability to capture more of the upside during rallies has been a key differentiator. While JEPQ employs a different options strategy, this difference has resulted not only in performance gaps, but also in tax inefficiency. Tax efficiency is another major advantage for QQQI. Like all NEOS high-income ETFs, QQQI uses several strategies to improve after-tax returns. First, it benefits from qualified dividend income from its underlying holdings. Second, the fund utilizes index options, which are taxed under the 60-40 rule. That means 60% of gains are considered long-term capital gains and 40% are short-term, providing a better overall tax treatment. Third, NEOS implements tax loss harvesting to classify over 90% of QQI's distributions as return of capital. These are essentially deferred long-term capital gains until the investor's cost basis reaches zero. While QYLD also classifies much of its distribution as return of capital, its total returns significantly trail QQQI. JEPQ, on the other hand, distributes mostly ordinary income, which is taxed at a higher rate, further reducing its after-tax return. Critics of covered call ETFs often cite the issue of net asset value, or NAV, erosion. These concerns are valid, as many covered call ETFs fail to recover during market downturns, leading to long-term underperformance. However, QQQI has demonstrated a strong ability to maintain its NAV relative to QQQ. In fact, just last week, QQQI slightly outperformed QQQ. The timeline is still short, but QQQI's track record through the 2024 bull run and 2025 correction suggests the fund can effectively hedge downside risks while capturing enough upside to maintain long-term performance. This is a rare and valuable trait among options income ETFs. As for my own investment strategy, I've taken a meaningful position in QQQI. I initially took a wait-and-see approach, but the fund's consistent performance, strong yield, and tax advantages have made it a core component of my business income strategy. Currently, I allocate all of my small business profits into a diversified set of NEOS high-income ETFs. In addition to QQQI, I hold SPYI, IWMI, BTCI, and IYRI. This allows me to generate a stable and tax-efficient income stream from my business proceeds. QQQI plays a critical role in this structure, offering exposure to the tech-heavy NASDAQ-100 while also delivering substantial monthly income. Outside of my business investments, my personal brokerage account focuses on dividend growth stocks and a few speculative growth opportunities. My long-term goal is financial independence through dividend income. Specifically, I aim to cover all fixed monthly expenses, things like subscriptions, car tabs, insurance, utilities, and groceries, entirely with dividends. Given its current performance and structure, I see QQQI as a valuable tool to help meet that goal. In conclusion, QQQI has rapidly established itself as a top-tier ETF in the covered call and active management space. It offers the right blend of performance, yield, tax efficiency, and NAV resilience. While it's still early in the fund's life, the data so far is compelling. Investors looking for a high-income solution with strong total returns and efficient tax treatment should be paying close attention to QQQI. The ETF's trajectory since launch, growing from $76 million to $1.5 billion in assets in just over a year, demonstrates investor confidence and market validation. And with its recent award as the best new active ETF of 2025, QQQI has not only met expectations, but exceeded them. I'll continue to monitor its NAV and distributions closely to manage inflation risk and preserve long-term income potential. For now, I'm confident that QQQI is well-positioned to be a cornerstone in income-focused portfolios moving forward. The combination of tracking the NASDAQ-100 closely, outperforming its peers, providing consistent monthly income, and offering favorable tax treatment makes QQQI the new king of covered call ETFs. For those evaluating income-focused ETF strategies, QQQI demands serious consideration. In summary, QQQI has emerged as a dominant force in the covered call ETF market, offering a unique blend of high yields, tax efficiency, and the ability to track the NASDAQ-100 index closely. Its impressive returns and strategic advantages make it a valuable asset for investors seeking both income and growth in a volatile market. As the ETF landscape continues to evolve, QQQI's innovative approach sets a new standard for active management and strategic investment. Consider exploring QQQI as part of your investment strategy to leverage its high returns and tax benefits. Stay informed on the latest market trends and ETF innovations by subscribing to our channel. Don't miss out on future insights that can help optimize your portfolio and enhance your financial security. QQQI is making waves by delivering 16.5% annualized returns, outperforming its predecessors and contemporaries like QYLD and JEPQ. With its superior tax efficiency and ability to keep pace with the NASDAQ benchmarks during both bull and corrective market phases, QQQI continues to set new standards in the ETF sector. As covered call ETFs redefine the investment landscape, consider reevaluating your approach to include dynamic solutions like QQQI. Stay informed on evolving market trends and emerging investment opportunities. Subscribe for more insights and updates on the tech-driven financial developments shaping tomorrow's portfolios.